Cost Volume Profit Analysis Part 1. This is our 221st module of the course of Financial Management. This topic is related to obviously the three very important components, which are cost, the quantity, the volume refers to the number of units which are produced, sold, and number three, profit, which is the prime objective of every business organization. So when we use the term cost in this discussion of cost, volume, profit, that is CVP, it refers to the amount that is incurred to produce some units, to manufacture some units. So for production, we need to incur cost, and this cost is then further also incurred to sell the units in the market. Now, the second term, which is volume, refers to the number of units which are produced. Why the volume element is considered in this analysis? Because this is the key component in the discussion of CVP analysis. Higher volumes, that means more production in terms of number of units produced, actually reduces the per unit cost of the product. We have discussed earlier that the fixed cost element is such which actually reduces in terms of per unit cost when we increase the number of production, because this cost remains constant, and when production increases, it is spread over more number of units. So the component of volume gets a lot of importance, because higher are the volumes, bigger are the volumes, lesser will be the fixed cost per unit, and so lesser will be the total cost per unit. The third thing is that we have to see what is the impact of the two on profit, because profit is nothing but the difference of revenue and cost. More is the revenue, more will be the profit. Less will be the cost, more will be the profit. In CVP analysis, what we actually do is that we try to see that what are the changes in the variable and fixed costs, and how do these two things affect the firm's profit when the volumes are changed. Now, this CVP analysis has got certain assumptions. Now, on the basis of this, we say that what will be the impact on the profit if the volume increases, and if the volume increases, that means the total revenue will increase. That means the total cost will also increase. Now, when the total cost is increasing, there is one component of total cost which does not change. So with the change in volume, what we need to remember is that one portion of the cost changes, but the other part does not change. And then we'll have to see the combined effect of the two, that is fixed and variable cost. But certainly if we are producing more units and we are selling all those units, the revenue will also increase, and we'll have to see the impact of this on the profit. So the first assumption of CVP is that fixed selling price is there. So the per unit selling price does not change. If the price is 10 rupees or 20 rupees per unit, we assume that this remains the same. Only that if the volume goes up, the total amount of revenue that we'll get will be more. The second assumption is that the total fixed cost also remains constant. इसके ऊपर भी हम बात कर चुके हैं कि fixed cost कभी भी हमेशा के लिए fixed नहीं होती. हम इसको fixed cost सिर्फ इस वजह से कहते हैं because this cost does not change with the change in the level of operations, production or sales. So this is a fair assumption that fixed cost remains constant for a certain period of time when we are performing this CVP analysis. And the final thing is per unit variable cost is also constant. So again, it is a realistic assumption, because in short run, the per unit variable cost does not change. Now the question is, what is included in variable cost? For example, raw material, the direct material cost is the part of the per unit variable cost. The labor which is directly working on that, so that's also a part of the per unit variable cost. And there is a possibility that over time these costs go up or down. So these three assumptions are the basic assumptions of CVP analysis. So this module, let's conclude our discussion in a way that CVP analysis is an analysis of these three components: cost, volume, and profit. What we have to see in this analysis is that with the change in volume, that means the number of units sold, produced and sold, what is the impact on the revenue, and as a result, what is the impact on the cost, and ultimately, what is the impact of this change on the profit. हम अगले मॉड्यूल के अंदर इसको मज़ीद एलेबोरेट करेंगे और देखेंगे कि CVP एनालिसिस कैसे किया जाता है.